Good day, professional, and welcome to the first class of our revision for cost accounting. So today, as previously informed, we are going to start from our objective questions. It is worthy of note to know that our revision has been divided into the 3 types of examination question we shall be ongoing, which is the objective, subjective, and the theory aspect. And I want us to let this be to be interactive as much as possible. Are we good to go? Please, you really need to unmute yourself so that you can really enjoy ourselves. Unmute yourself so that we can enjoy ourselves. Your active participation is highly demanded. Unmute yourself. The first question goes thus. A cost driver is dash. A cost driver is dash. A cost driver is dash. A, an item of production overhead, an activities which generate cost, the cost of operating department, a common cost which is shared over the cost center. E, any cost relating to transport. Which one is best for a cost driver?
B.
B.
An activity which generates cost.
A cost driver is an activity that generates cost. So B is a correct answer. So B is a correct answer. B is a correct answer. 2. Which of the following is an example of selling cost? Remuneration of sales director, advertising and publicity expenses, cost of catalog, price list and examples, salaries, commission and traveling expenses to staff, and factory rate. Which one is not an example of selling cost? Which one is not example of selling cost among the alternative? Anybody?
D.
D. D is salaries, commission, and traveling expenses to what? Sales staff. Since it is a sales staff, it's also among the selling cost. E, factory rent. E, the factory rent is the correct answer because it is an overhead cost that is used in our production process. E is the correct one. 3, cost related to the product or service that are computed in advance of production or rendition of services on the basis of specification of all the factors that is affecting the cost is called dash. Selling, predetermined cost data, historic cost, stated cost, a predetermined cost. Why the predetermined cost and not the selling cost? Can you differentiate?
Predetermined cost.
Predetermined is a cost that we have proposed before the activity. Yes.
Advanced.
Before
activity. Advanced.
Yes, advanced, which is before the activities. Thanks so much. Let's keep it up. If OK Hospital requires an additional nurse. Elisa, are we together? The correct answer is predetermined cost. A selling cost is the cost of selling a product. Cost data is an information about what we have spent, the total cost of producing a product. Historical cost is the actual cost price of our product item, while patent cost is the cost of buying the right of producing an item, while predetermined cost is a cost that has been planned before the work activities. We call it a budgeted cost. 4, if hospital requires an additional nurse for every 10 patients, then this is an example of dash. A, fixed cost, total cost, variable cost, mixed cost, step cost. What is the correct answer? A, fixed cost, total cost, variable cost, mixed cost, step cost. Can somebody differentiate between those costs that we have? Then from there, you'll be able to know the actual one for it. Can we differentiate between that cost? Hello?
Okay, I think fixed cost is cost that is
Don't
fixed.
think, be specific, sir. Don't think, be
Fixed
specific.
costs are costs that are fixed. For example, like rent, it may be fixed. Then total cost is a combination of the fixed and variable cost. And mixed cost is also the combination of fixed cost and variable cost. And the step cost is the same thing as mixed cost.
Step cost is not the same thing as mixed cost. Thank you. Can somebody differentiate between the mixed cost and step cost?
Semi.
Okay, semi. Yeah.
Yes.
So when we say semi-mixed cost or semi-variable cost, what does that semi-variable cost mean?
That's costing between fixed and variable.
Costing between fixed and variable. Okay, thank you. When we say a step cost at a particular time will be what? Constant. And later be variable. Constant, variable for a time, be fixed for a particular time, variable at a particular time, fixed for another particular time, be variable at a what? Particular time. So a step cost are just the costs that are constant for a given level of activities and also increase or decrease when a threshold has been reached. What do we mean? A step cost itself is not constant permanently and it is not variable in nature. It changes whenever it changes when a particular thing has been reached. For example, is your salary in your company, is it fixed or variable? We can say no, it is semi-variable. Why is it a semi-variable? If you are working, okay, let's leave this. Let's say school fees. Is your school fees in your school, is it fixed? The answer is no, it's a step. Why is it a step? Your school fees might be 10,000 naira this year. You know that it is that 10,000 naira you are paying. Then they will add another money in another year. It's top. That is the money you pay throughout that year. You are expecting those people that are coming from year 1 to year 2 to pay the same amount of money they did. What you paid in year 3, you are expecting those people that are coming from year 2 to pay it in year 3. It changes. That is what you call step cost. Step cost will be constant at a particular time, and in another time, it will also what changes as a result of what? A threshold. When we say a threshold, as a result of a circumstance. Do we get that? So we have, okay, let's go back to the question. We have, okay, hospital require additional nurse. When a school is admitting students in accounting department, it is only 1,000 students that they are admitting. If the next year they now said they want additional students in accounting and no longer 1,000, what does that mean? Remember that each school already have the numbers of students that they are to admit. Just as we have the numbers of students that are expected to be in each class constant, because that is the policy according to NUS. By the time they are now taking additional students, then it becomes variable because it changes. Is that taking? I mean, is that taking? That's why we call it what? Because it is constant at a particular time and further change in another time. So the correct answer is our what? Step course. It's a step course. Okay, hospital require additional nurse for every 10 patients. They already have the required numbers of nurse that they have. Taking additional, if this is nurse, the nurse is at this level. If they take additional, it moves up like this. It remains that for a particular level. But they now take additional again because they have additional 10 patients. It is like this. So they now have additional 10 patients, it will still move. When it moves, it still remains at this level. It remains at that level. Why it remains at that level? If they have another 10 patients extra, it will still change. So this is step, moving from year to year to year to year to year to year. Is that taking? So the correct answer is step cost. There's, what do we call a missed cost? A missed cost is a combination of both variable and fixed costs. For example, we have, what do we call it? We have in a production, we cannot have variable without having fixed. That is a what? A missed cost. While fixed cost is a cost that remains constant, irrespective of the level of activity. No matter what happens, it will never change. Okay? And the variable changes as the activities also changes. That is that. Let's go to the next one. 5, a biscuit manufacturing concern. A biscuit manufacturing company will use what types of costing method? A, operating, departmental, batch, contract, or job costing. Look at the question. A biscuit manufacturing concern means that biscuit, yeah. When you see concern, it means manufacturing company. So don't think concern with, no. A biscuit manufacturing concern as usual means a biscuit manufacturing company. Is that taken? And they'll be using what? Batch costing. Let me be using highlighting. They are going to use what? Batch costing. Because for every production in a manufacturing organization, it is done according to what? Batches. It is all production are done in batches. All right. Marginal costing is concerned with dash. 1, fixed cost.
Variable cost.
How much?
You did not even let me read it. So are we choosing A, B, C, D, E? Which one are we choosing?
B. B. B.
D. Which one are we choosing?
B.
The correct answer is B, which is what? Variable cost. Advantage of cost accounting system. Accrued only to dash management, workers, consumer, government. A, B, C, D, and E. Which one is your short bet? Advantages of cost accounting goes only to dash management, A, B, C, D, E.
E.
Management is for A, workers is for B, consumer is for C, government is for D, E is all the above. Which one is correct?
E.
A. Management. A.
Cost accounting is concerned with all of the above. Cost accounting is advantageous to the management because it allows management to take informed decision. It is for the workers because it enables the workers to increase in their productivity and also what? Be informed about the benefit in the organization. Consumer, it allows the consumer to make a timely decision as at when to buy, as at the company that can supply a quality service at a price that is reasonable.
I have a question, sir. Hello, sir.
Yes, I can hear you, sir.
Hello, sir.
Yes, I can hear you. Can you hear me? Oh, yeah, take it again, sir. I couldn't hear you. Your network was fluctuating. Hello? Unmute yourself. You are muted. Unmute yourself and ask us the question. Okay. While I'm waiting for your question, let's continue. 8. Interest on capital. Not actually paid, but added to the cost of projects for this. Okay. I thought the word only supposed to signify only one out of the options, sir. Thank you. This is it. They said advantage of cost accounting system goes only to who?
So that's management.
Okay, advantage of it goes only to who? Yes. It goes to the management. It goes to the workers, it goes to the consumer, it goes to the what? Government. Do we get that? Who is cost accounting important to? That is the meaning of the question. Who is the cost accounting important to? Or important of cost accounting is for who? They said it's only for who? Cost accounting is for all of them, not specifically the management. If they said cost accounting is mainly concerned with decision to, they now put dash, then you can pick the management. But this is advantage. Cost accounting is advantage to everyone. Do we get that? We use cost accounting to, it is beneficial to both internal and external usage. Who are the internal users? Management and workers. The external users, consumers and government. Who are the consumer? Your customers. those people that consume. Why is it important to them? If the company did not provide a quality service, a quality product, and at a reasonable price, then they will go to your competitors. What is the essence? It means the company has not engaged in what? In adequate cost accounting system, because you are not able to manage your cost, your overheads, and you are not producing efficiently. You also think about the government. What is the other state? What is my responsibility to the government? I've done this product. What are the other things that I can actually tap from the opportunity of the government? That is why it is important to watch all of them. We said cost accounting is a managerial decision making. That managerial decision making is on what? All this. I hope that is clarified.
Yes, sir. Yes, sir.
Shall we? Next one, interest on capital, not actually paid, but added to cost of a project for decision making is called dash. Interest on capital, not actually paid, but added to the cost of project for decision making is called dash. Fixed cost, out of pocket, variable, imputed cost, uncontrollable cost. What is your bet?
I think it's imputed cost.
You think? I wouldn't be taking anything think. I want it to be specific. Interest on capital that we did not pay, but we add it to the cost of a project in order to make a decision is called what? I'm waiting for you. Is it a fixed cost? Is it an out-of-pocket cost? Is it an out-of-pocket cost? Is it variable, imputed, or uncontrollable cost? What is out-of-pocket? What is out of pocket?
I think out of pocket is like an additional secured in a project. Hello, sir.
Yes, sir.
I think out of pocket cost is like additional cost incurred out of out of budget.
Don't think. Be specific. Don't think. Come again. I don't want to think.
Out of budget cost.
When we say out of pocket, it means more cost you paid from your pocket. Out of pocket, money you paid from your pocket. So when you pay money from your own pocket, which is from your personal money, without even thinking whether you'll be reimbursed or not, it's called out of pocket. Do we get that, everyone? When you make a payment with your own money, that is from your pocket, without thinking whether it will be paid back to you or not, we call it out of pocket. Okay, we know what a variable cost is. Imputed cost is the cost that is incurred on investment directly. Imputed cost is the cost that is incurred in our investment directly. We call it imputed cost. A cost that is not, a cost that is not incurred exclusively is what we call imputed. And we use it under our what do we call this topic? When you are doing your return on investment, ROI, which is our capital employed, less your imputed cost. Okay. And our imputed costs actually include our equity, our rent, our interest on capital. Yeah. Oh, our interest on capital. That is what we call our imputed cost. Uncontrollable cost is the cost that is beyond the capacity of the organization, the one you cannot control, a cost that cannot be minimized, a cost that cannot be controlled but can be minimized, a cost that is not within the capacity of the management. For example, inflation. When you are buying your raw material at the higher price, you cannot control that. The only thing you can control is you minimize the wastage, or you reduce the consumption of that material, and you try to use it to maximize your productivity. Okay, so our correct answer, interest on capital that is not paid, which we are not paying it to the cost of a project, is called imputed cost. D is your correct answer. D is your correct answer. D is your correct answer, because we incurred imputed cost directly on an asset without investing it back into the cost of the company. Any further clarity required on that?
No, sir.
Any
No, sir.
further clarity required on that?
Let's move on, sir.
No.
Okay. Shall we move on?
Yes, sir.
9. The following extract was taken from the production cost budget of XYZ Limited. Production units, 2,000, 3,000 respectively. Production cost, 11,100 and 12,900 respectively. The budget cost allowance for an activity level of 4,000 units will be what? A, 7,200, 13,240, 14,700, 17,200, 22,200. The budget cost allowance. Production is given as 2,000 and 3,000. Production cost is 11,100 and 12,900. The budget cost allowance for the activities level of 4,000 units will be what? Yeah, who is good at doing that? Keep waiting. What did they ask us to do? What did they ask us to do here? What did they ask us to do? What will be the budget for 4,000 units? 2,000 units gave us 11,100. 13,000 units gave us 12,900. What will be the budget for 4,000? Anybody? I'm waiting. I'm waiting. I'm waiting. I'm waiting. I'm waiting. How do you arrive at your 22,200? Is it an assumption? Esther, how did you arrive at your 22,200? How do you arrive at your 22,200? The following extract was taken from the production cost budget of XYZ Limited. Production is given as production of 2,000 gave us 11,100. Production of 3,000 gave us 12,900. What is the budget cost allowance for activities level of 4,000? I'm waiting. I'm waiting. I like you, sharpshooter. 11,100 divided by 2,000 times 4,000 give you 22. Yeah, try 12,900 divided by 3,000 times 4,000. Will it give you the same? Try that. Will it give you the same? Try that. Will it give you the same? Try that. Will it give you the same? You will see that it will not give you the same. Aha. So when you use the first one, it gave you 12,2. When you use the second one, it gave you 17,2. Is that not? So
Yes,
which other method do you think we can use that will justify this position?
So I have a method I'm thinking of.
Okay, oh yeah, let's hear it out.
The first two will give you two different answers, but if you minus the production cost of 3,000 minus 2,000 and add it back to the production cost of
3,000.
3,000, yeah, it will give you 14,700.
It will give you 14,700.
Yeah.
What method have you used?
So that's minusing the production cost of the 2,000 and 3,000.
So what method have you used? Okay, my dear all, look at the question. They have asked us for the cost budget. If you use high and low, you'll be getting your words. High and low should be giving you something around 7,200. What is high and low? High and low is highest cost minus lowest cost divided by highest output minus lowest output. Highest cost is, which one is highest between the two? 12,900. Okay. The lowest is 11,100. The difference should be giving you around 1,800, if I'm not mistaken. Is that not? Divided by highest output is 3,000. Lowest is 2,000. This will be giving you 1,000. 1/8 divided by 1,000 will give you around 1.8. Multiplied by 4,000, you'll be getting 7,200. High and low. But this is quite simple. What did they ask us to do? Budget cost allowance. They've given us a production cost budget. This is a budget. A budget will rather be a fixed, incremental, or what? Or to be activity-based. First, what are you doing? You are doing a cost budget. A cost has increased from, a production has increased from 2,000 to 3,000. Budget, what are they asking for? 4,000, which is incremental. Which is what? Increment. It increased by 2,000 to 3,000. What is the increment? 1,000. Then 3,000 to 4,000. What is the increment? 1,000. Which means the increment between the production is what? 1,000. How do we get that? 3,000 minus 2,000, 1,000. Add the 1,000 to 2,000, 3,000. 4,000 minus 3,000, also 1,000. That means we have been adding the increment, which is the differential between each year's cost. So your 12 minus 11 should give you 1,800. To get the cost for the third year of 4,000 units, 1,800 plus 12,900, what do we have? That should be giving you around 14,700. That is the correct answer. Is that taken? At times, yes, that's why I said do not, that's why I said do not assume, be specific. Because when your mind says something, just say it out. Don't say I think. Thinking, your thought may be accurate, and at times it may not. Do not argue with your mind. Okay, that's correct. 14,700. The next one, still under that, the actual cost of 162,500 units, not under it, another one. The actual output of 16,500 units, and actual fixed cost, look at it too. Actual output of 162,500 and actual fixed cost is 87,000, were exactly as budgeted. The actual expenditure of 300,000 naira exceeded budget by 18,000 naira. What was the budget variable cost per unit? Everybody. What was the variable cost per unit? 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 I'm waiting for your option. I'm waiting for your option.
Sir.
Yes, boss.
My option is 1.42.
How have you arrived at the 1.42?
Okay,
Open
it says the actual budget exceeded the budget. Actual expenditure of the budget was exceeded by 18,000. So you add the 18,000 to the 300,000, that will give you 318,000 minus your fixed cost, since you're trying to get variable cost. Minus your fixed cost will give you 231,000. Then you divide it by the units.
Thank you. Thank you.
Yes, sir. You're welcome.
Do we have another option? Do we have another option? We are working per unit. They said our actual fixed cost, variable cost per unit, you'll be looking at, let's say, selling price, less your variable, less your, let's say, total cost, because we are talking of cost. Let's say our total cost, less your variable, less your fixed cost, whatever it gives you, divided by the what? Oh, we are looking for variable cost per unit. Oh, this will not go. Our actual output of 162,500 units and actual cost of 87,000 units were exactly as projected. Were exactly as budgeted. However, the actual expenditure of 300,000 exceeded the budget by 18,000 naira. What was the budget of the cost? Oh yeah, talk to me. Talk to me. You don't want to talk to me? Shall we go?
Go with you, sir.
That is objective question 10. Okay. First, let's see what's our projected expenses. They said our budget expenses, our actual budget exceeded the budget by what? 18,000 naira. Shall we turn it back? We have our 300,000 minus what it exceeded, 18,000. What would that give us? What would that give us? What would that give us?
282,000.
It should give us 282,000. I'm not with my calculator. I am not with my calculator. How do we now get our budgeted variable overhead? Remember, your budgeted variable overhead will always remove fixed costs. So your budgeted variable overhead, if this is our actual budget expenditure, then our budgeted variable overhead, our budgeted variable will now be the actual budget 282 minus your fixed overhead, fixed cost, less your fixed cost. What is the value of your fixed cost? The actual expenditure, fixed cost is 87.
Yes.
Let's say it's 7,000. What do we have? This will now become your variable.
195,000.
200 and
195.
Okay. 195,000. What is the production unit? 162 is the actual unit.
162,500.
Actual unit is 162,500. So our variable cost per unit will now give us 195,000 divided by 162,500. How much will that give us?
1.2 unit.
1.2 naira per unit. Which of the options? So our A is the actual correct answer. Do we get that, everybody? Do we get that?
Yes, but kind of technical, sir.
Yes, but the way they have used it, exactly. It's kind of technical.
This is confusing someone, sir.
Yes, when we said a budget is exceeded, then what should be the actual one? I supposed to give you 5 naira. I gave you 3 naira. I've exceeded it by 2. What is your own actual one? Because they have given us actual output. They did not give us exceeded output. Actual output. To get the actual, remove the exceeded. At times they will give you is reduced by 18,000. If it is reduced by 18,000, we will add it back to get the actual we have budgeted. Haven't gotten the actual, then let's remove our fixed from our actual so that we can get the variable. Haven't gotten the variable element. Since we are looking for the variable per unit, let's divide it by the numbers of output. And that gives us what we are looking for. I hope that's taken everybody. Thanks so much. Shall we permit us to stop at 10? Let's just look at, okay, I have a question. My answer is, Esther, this is medicine after death. Okay, you weren't saying your answer earlier until we concluded it. That is Ojo. We no go agree. All right. Wait, though. We have many. Okay, let's try to do it to 20 before we even move on. Let's try to do it up to 20. An organization currently produces one product which sells for Ghana cedis of 130 Ghana per unit. The cost per unit of the product is as follows: from direct material to the variable cost per unit. Total fixed cost for the period is 1,600, 1.6 million naira in Ghana cedis. How many units should be produced and sold to generate a profit of 250? Anybody? How many units required to be sold to be produced? Our production will be equal to our sales to generate a profit of 250,000 Ghana cedis. I'm waiting. I'm waiting. I'm waiting. I'm waiting.
You wait there until you die. Yeah.
Okay. I think you want to take it as assignment, right? Do you want to take it as assignment? Oh yeah, give me option. Give me option.
Esther has given her own option.
Oh, Esther has given her option. 23,125. Esther, how did you arrive at 23,125? You know, I'll be asking. Esther, how did you arrive at 23,125? Esther, how did you arrive at 23,125? We are waiting. How do you arrive at 23,125? 3,125. How did you arrive at 23,125? Hmm. 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 Esther is having the total fixed cost less our variable, then divided by, what has Esther done? Esther has done selling price of 130 per unit minus the variable cost to get the fixed cost. Now divided it by what? Plus the targeted profit divided by contribution unit per unit. How many units will be produced and sold to get our target profit of 250,000 naira? Confirm. Esther is correct. She has already solved it. Shall we solve it too? Shall we solve it too?
Yes.
Is it clear to us as she has solved? Is it clear to us?
No, sir, please, can we do it your way? Let's see it the movie.
Okay. Oh yeah, go. So we are on an organization currently produces one product which sells for gigahertz 130 per unit. And the total fixed cost for the period is given as 1,600. And we asked how many units will be produced and sold to generate a profit of what? 250,000 naira. So this is what we are in fact solving. Question 11 objective. What is, we are targeting profit. They gave us, see the info gave us. They gave us the selling price. They gave us what? Variable cost. So less your selling price from your variable cost. 130 minus 50. What will that give us?
80.
This is our contribution margin, right? Or we call it contribution profit. That is what? 80. And they told us that the units sold and produced, they said how many units will be sold and produced to get a target profit of what? 250,000 naira. And they've given us our fixed cost. Just have your target profit. Your target profit for units sold. You just give you your fixed cost plus what? Target profit. Then divided by your contribution margin. That's all. What's our fixed cost? Fixed cost is 1.6. 600. Add your target profit, 250. Divided by your contribution margin, 80. What is your answer? Giga HCPM. So what did this say? 23,125 units. 23,125 units. That's how we have arrived at the 23,125 units. Is that clear? Is that okay?
Yes, sir.
If it is okay, if it is okay, a prime cost is what? 12. A prime cost is what? A, all costs incurred in manufacturing of a product. B, I didn't get.
The total direct cost.
The total direct cost. E, the total direct cost. The most important activity where cost reduction may be applied is dash. What is your sure bet? What is your sure bet?
A, improvement.
I didn't get that.
A.
The most important activities where cost reduction can be applied is improvement, purchase procedure, product design, better factory layout, cost audit.
Better factory layout.
In which of the activities
Better
can we?
Factory layout.
Sir?
Better factory layout.
Better factory layout. Why do you think that?
Product design or improvement of product.
You know, if it's in terms of improvement, the reason for the production of a profit, the reason behind making a product is for profit or the satisfaction of customers. So
yes.
Improvement needs to be advanced in order to satisfy that side. So if you need more cost, if you consume more cost in doing that, purchase procedure purchase procedure could be in terms of the material used in transformation of that raw thing, this thing into. So if you get a kind of like not good material, let's just put it that way, it can bring about an abnormal loss and it will incur more cost. Product design. During advertisement, product design, some customers used to look at how the presentation of the product. So the product design also will require more cost. And then cost audit. It is well. But I tell you that it's better factory out.
You have tried. We have tried. You have tried. You have tried. You have tried. I really cherish that. They said the question is the most important activities. Which of the activities that is really important that we can actually try to reduce our cost? That's why they say where cost reduction is. Improvement means when you are improving a product or a services, in that you can never negotiate our reduction. Purchase procedure, which is the way by which the organization source for their material or the items used in production, that could actually be determined by the word supplier. We do not have capacity in that because it is outside. Product design, the stage at which the company designs its product, make the product that will be launched into the market. That in product designing, it is still at the preliminary stage. Okay, that is actually within the organization. Better factory layout, that has to do with how we really want to structure our organization, the movement between our operation and other activities. That is also internal. Cost audit, it is just a process by which we decided to write off some costs which are not necessarily and decided to consider some costs that are what? Relevant. So in what we have said, this, and this actually go. But the best activities that we can reduce our cost is on product design. Because at that stage, we can tend to say, oh, this cost is not necessary. We are still designing the product. We are not launching it yet. Why will you be giving me exorbitant? If I have some, what do we usually call them? Some vendors. Instead of going for the vendors that is high, I can go for the one that is still affordable and competitive. It's actually in product design. Okay, value analysis mainly aims at increasing what? Value analysis aims at increasing dash. Use value, esteem, cost, exchange, and account value.
Use value.
Value analysis. It is the value we have used. Production. Labor productivity can be measured by A, total labor hours by total output divided by total machine hour, actual labor divided by the standard labor hour, total labor hour divided by total machine hour, and total output divided by total labor hours. Which one is accurate for labor productivity measurement? How do you measure your labor productivity? Steve, how do you measure the labor productivity? No response. How do we measure our labor productivity?
Total output divided by total labor hour.
Total output divided by total labor hours. That will give you your productivity. My dear all, let's go to the next one. Let's stop at that objective. We have done at least we have tried on that objective. Let's quickly do sub-objective and also go to some practical aspects, just as, okay, it's 120, too much. It's 120. Are we good to go? Are we set?
Yes, sir.
If you are ready, I am set to oh.
We're good to go, sir.
Okay. If you tell me we are good to go, cost accounting is a valuable aid to management in dash.
Manufacturing.
Decision making. Go. Manufacturing.
Cost accounting.
Decision making.
Cost accounting is a valuable aid to management in dash.
Decision making, sir.
Why are we choosing decision making?
In the objective, when you make mention of the value of that I first argued on, you said management is there, workout.
I like that.
So, as far as management is concerned, it's valuable for them in decision making, sir.
Yeah, that's accurate. Cost accounting is a valuable aid to management in decision making process. In decision making process. In decision making process. Okay. The next one, cost audit. Cost audit is the dash of correctness of one's account. Cost audit is dash.
Sir, review.
Let's look at the question.
I'm coming.
Is that for me? Is that for me?
No, sir, no, sir, I'm sorry, sir, I'm sorry. Someone is knocking at my door.
We have cost accounting is valuable for the management in making their timely decision. So the next one is a cost audit. Cost audit is the dash of the correctness of cost accounts. What do we think is the correct answer?
Verify.
Cost audit is the dash of the correctness of cost accounts.
Verify or verification.
Cost audit is the verification. Is the verification of the correctness of cost account. If I don't use verification, I can use is the ascertainment. Okay. Third one, classification of cost is the grouping of cost on the basis of common dash. Common what? On the basis of common. On the basis of the common dash.
Characteristics.
On the basis of classification of cost is the grouping of cost on the basis of common
element.
Common function. It can also be characteristic, as you said. Correct. Cost of seeking to create and stimulate demand of securing others are treated as dash cost. Cost of seeking to create and stimulate demand and securing others are treated as what?
Selling cost. Sir, please, can you differentiate between selling cost and target cost, sir?
Selling cost. Target cost is the cost that the company wants to achieve. What the company plan, the cost that the company plan to achieve, that's what we call target cost. Why the selling cost is the cost that we sell the product. The actual cost of selling is what we call the selling cost. But the target one is the cost we determine to sell the product. Do we get that? So we can call our targeted selling price or selling cost as projected selling cost. Why the actual one is the selling cost itself.
Okay, sir.
If that is clear, let's go to the next one. The number for calculation of the average stock level in quantity terms is dash.
Maximum stock level.
What is the formula for calculating our average?
Plus minimum stock level divided by 2.
Maximum plus minimum divided by what? 2. So we have our maximum stock level.
MSL.
Maximum stock level plus minimum stock level, both divided by what? 2 will give us average stock level. The transfer of material from one job or work order is affected through which of the documents?
Material transfer.
Which documents do we use? Exactly. Material transfer note, or you may call it material transfer document. Please, you should be seeing part of this in what I gave you in the other stuff that I gave to you. Question. The system of undertaking stock verification after the close of stipulated period is dash. The system of undertaking stock verification after the close of a particular period is dash.
Periodic inventory taking.
Periodic inventory taking. What can we also call it? We can also call it periodic inventory control. Periodic inventory taking. Let us save. Under control accounting system, all the transactions relating to material are recorded in which book?
I think it's store ledger control account.
You think? I said you should stop thinking. Under the control accounting system, all the transactions are recorded in the store ledger. Store ledger. If you call it stock ledger account, you are right. If you call it store ledger control account, you are correct. If you call it material control account, it's still the same thing. Okay, a document which provide the details necessary to support an entry in the cost account. A document that provides the details necessary to support entry in the cost account is called what?
Cost journal.
Cost journal. Cost journal is correct. You can also call it costing journal. You can call it cost voucher. If you like, you can call it cost adjustment. It's correct. That point in which your manufacturing process, that point in manufacturing process in which your joint product can be recognized as a separate product is known as what? Recognize your joint product as a separate product. If we are our product that we produce jointly, if you now recognize it individually, separately, it's called what?
Separation cost. Separation point, sorry.
Separation cost, or you call it split off. That means we have splitted it. Split off. Or you call it what? Separation. We have separated it. Okay. Separation, or you call it split off. Is that taken? My dear, let's do theories more. We have many stuff there. But I'm also trying to consider the timing also, so that everything will be actually
sir, is it possible for us to treat all before the exam date, sir?
Definitely. That is why I said we will actually be having our class every day.
Okay, sir.
And
thank you.
Like I said, I shall not be following we shall not be treating the other ones, but you already have the solution there. Just compare. It's only the solution to the theory part of the other one that we will try as much as possible to lay our hands on. But you see those objectives, even though the one that I've given to you, if you can just master and practice that, you already have the solution for both theory and no objective in that one. There's no objective. If I'm not mistaken. No objective there. It is subjective. Just look at the short answer question and the theory, you are fine. What's come was ensure you practice the short answer and just practice that. It's okay. Then we try as much as possible to conclude at least the theory of this and the subjective.
Okay, sir. Thank you, sir.
Okay. You're welcome. And God's willing, in our next class, we'll be having double period. They are still resolving that issue of yesterday. Otherwise, we would have double period today, but someone is also interested in the platform for PSC. Okay. Everything being equal, bring out a pen and paper and let us discuss. Are you good to go?
Yes, sir.
Section B. Cost accounting is a set of procedure that is used for refining raw data into usable information for management decision making. Do you see how we put it? Into what? For information for what? Management decision making. For ascertaining the cost of the product and services and its productivity. Despite all the usefulness of cost accounting to the organization, it also has some limitations. My dear professional, you are required to highlight 6 limitations of cost accounting. Give it to me. One. Who is assisting us? Do you want me to be calling your name one after the other?
It's expensive to collect data.
Should I call him? Esther, where are you? Esther, where are you? Solomon, are you set? Everybody, what are the limitations of cost accounting?
Okay,
Abike?
it's expensive to collate data.
Fazi? Who else I didn't mention him? I've mentioned 5 now. Chigozie. Yeah. I know all of you's name. There's nowhere you can hide. Yeah, give me the difficulty in maintaining cost accounting system. And it goes. Next. That is coming from who? It should be Esther. Yeah, I know it should be Esther. See, irrespective of the limitation that I'm giving to you, I really want you to know that one idea is also very, very much important. In cost accounting, most of what we do is what you do every day. Most of all the cost accounting activities are what you do every day. So just limit, and you already know the aim of cost accounting. Cost accounting is to reduce cost, improve performance, and ensure that, and it is used for managerial decision making. Think like a manager. As a manager, I will always want to increase my profit and reduce my costs. What are now the benefits? Esther tell us that yeah, thank you, Abike. Difficult in maintaining cost accounting system. Just call it high cost. See the way I'm framing it. High cost of maintaining cost account system. I'm using your word. I only reframe it in the proper way. Abike says it is complex and cumbersome. Let's say it is difficult to understand. Have you put it the way Abike has put it? What is complex? Difficult to understand. Cumbersome, it is difficult. Cumbersome means difficult. Have you put it in that way or not? You are saying the same thing. Yeah, give it to me, everybody. Give it to me. I want to use your word. I'm not giving you my own. Give it to me. Chigozie.
So the
It is
cost accounting
limited to the
system.
company.
I didn't get that.
It is limited to the company that uses the system. It cannot be used compared to accounting system. Like cannot be used for I don't know. I can say, but it is limited to the company using the system.
Let's say suitable for each individual concern.
Okay.
Have I written your mind?
Yes, sir.
Yeah, give it to me. Another one. Yeah, what are the other limitations that we can think of?
Cost of installation could be high
out of
and
6.
unaffordable.
I didn't get.
Cost of installation could be high and unaffordable.
Cost of installation could be high and unaffordable. Is that not the same thing with high cost of maintaining the cost accounting system? Yeah, it's the same thing.
The same thing. Okay.
Why can't you say that uniform procedures? Cost accounting usually take uniform procedures. What are the procedures? What are the procedures? First, calculate your marginal costing, and after that, remove your fixed cost because that is a fix. It does not vary, irrespective of the level of activities. It still remain intact.
But sir, can we also say the use is only limited to internal or management event?
And that's what I said. It's suitable for each individual concern.
Yes, that is suitable for each individual concern.
Sir,
Give me the next one.
Can we put it this way? If it is not broad in nature as compared to accounting system, as compared to financial accounting system.
Not broad in nature. Cost accounting is broad though.
No, like what I mean is that you know, for financial accounting can be used for presentation compared to cost accounting, like for tax purposes and all that, and other external uses.
Okay. Let me find the right use of word for it. Say it again, sir.
Like it cannot be used for tax purpose, like further.
It cannot be used for tax purposes.
Yes, Pepe.
Okay. Let's remove tax purposes. Just let us say that. Let's say.
Sir, this. Okay.
I can hear you.
This uniform procedure, should we put it this way? Lack of uniform procedures.
Okay. No, not lack of uniform procedure. Let's say it takes uniform procedure because it is uniform. Everything in cost accounting is almost the same thing.
Okay.
Okay. It concerns production and it concerns food. Oh, I want to use something management. No. It is not. That one does not sit well. That doesn't sit well. Give me another one.
So another one is the analysis of cost data may be too time consuming.
Give me another one. Give me another one. Yeah. Yes.
The analysis of cost data may be too time consuming.
Okay. Hello, I didn't get that.
The analysis of cost data may be too time consuming.
Okay. Thank you so much. You can say it consumes time. Yeah. It consumes time. Yeah, give me one more. Give me one more. What of it is based on assumptions.
Mintimbo.
Don't come up. It is based on assumptions. Because most of the cost accounting items are usually being based on what? Assumption, which we call a presumed notion.
Yeah.
Can we have one more to close out? 1, 2, 3, 4, 5, 6. Let us have one more so that it will be 7. Oh yeah, it involves use of many techniques or methods. This also limits us, and that is why it makes it so difficult to understand. No, cost accounting do not use historical. No, cost accounting, Esther, cost accounting is not historical. And cost accounting always use future cost. That is why we are having budget. It predicts, it will use the current data. It will now use it to predict the future outcome. So if eventuality in that future, our actual do not correlate with what we predicted, we now have a variance. That variance itself, we will also investigate. After investigating it, we now take a corrective action. I hope that's taken. Yes, Thank you so much. You have done well. Now, let us check the big part of it. Side limited, when you have a question, I always love to start from the requirement. Side limited, we're given the following information. What do you want to do? You are required to determine the linear function for maintenance cost per annum using the range method. And using the cost function, forecast the maintenance cost in 2017 based on the volume of what? 155 units and a cost inflation of index of 112.5. For who? Side limited, who have production units for 2013, 14, 15, and 16. Maintenance cost is 675, 723.60. Cost of inflation is 100 for 2013, 103.5 for 2014, 107.5 for 2015, and 2016 is 110. How can we determine our linear function? And also, using the inflation cost, how can we forecast the maintenance cost for 2017? They gave it to us to 2016. How can we have it to 2017? Oh yeah, one. Let's take it one after the other. Let's take it one after the other. The first one is, how can we determine our linear functions? You have 2013, 14, 15, 16. What do we think they are referring to there? What do we think they are referring to there? Thank you too. Provide the following information: production in units, determine linear function. So call it determination. We have year production unit. Let's have our year here. Let's have our unit here. Let's have our cost like this. 2013 to 16. So we have our 13, 14, 15, and what? 16. What is the numbers of units? Yeah, I'll be calling it for me. Me, I pick 134,200. You pick 142,600. Another person should pick 151,200. Another person should pick 150,200. So I go first, 134,200. What's the next one?
The 2015 is up to 151,200. 2015, 151,200.
151,200. Yeah. Thank you. Who picked 2014? 142,600. Who picked the last one?
150,200.
150,200.
150,200.
Yeah, let's go for the cost and do the cost as well. I'm picking 675,000. Pick your own.
72,360.
675,000. What's the next one?
72,360.
360.
360.
2360. Next one.
Okay.
$50. So we have our year, we have our units, we have our cost. Which method do you think we can use to determine our linear function? Which method do you think we can use here? Just use the high and low method. To use the high and low method. What is our, remember our high and low method, you first write out the formula. You have your high cost or the highest cost minus lowest cost over high output minus lowest output. Oh yeah, look at it. What is the highest cost in this question?
794.
Which cost is the highest?
2016.
I think
794, 750, 2016.
2016. 794.
760.
750, right?
Yes, sir.
Yeah. What is the lowest cost? Is it the
Lowest
same thing
cost.
as the highest output?
Yes, sir.
Yeah. What is the lowest cost?
675,000, sir.
675. So yeah, you write it out. High cost 794, 750 minus low cost 675,000. What's our highest output? Output is a unit. What's our highest unit?
151, 200.
151,200.
151.
200.
What is the lowest?
134, 200.
134, 200.
Are we sure then that this 794 is correct?
Yes, sir.
794, 750. Hey. All right, find the difference. Figure me what we have.
And for the And the numerator is 119,750.
119.
750.
Denominator.
17,000.
Denominator is 17,000.
119,750 divided by 17,000. What is our
That
variable
is
cost per unit?
7 units. 7 naira per unit. Sorry.
7 naira per unit.
Yes, sir.
Is that taken?
Yes, sir.
Now, I haven't got that. The next thing is, let's find our cost function. Our cost function is y equal to a plus bx, where our a is equals to what? Y bar minus bx bar. Y bar minus what? Bx bar. Our y bar is summation y over n, and our x bar is summation x over n. Then our b is the what? Variable cost. Is that taken? Now, look at the question. Look at the question. In looking at the question, what is which one is our y? Which one is our x? Drawing your xy axis. What is always here? What is always here?
Price price is always at the x. Y unit is always at the y.
This is cost.
What's the cost? Sorry.
This is what? Units. Standard. Are you
Yes,
sure? Is this not price and this is unit?
Price and cost are the same now.
Which one for who?
That,
Yes, I know price and cost is the same. So I'm asking which one is actually for who? Which one is actually cost? Which one is actually unit? Is X for unit or X is for cost?
X is for cost. Y is for unit.
X is for cost.
Since you are certain about that, that is just put your words. Put your X here so that we recognize it. Put your Y here. Okay. Now, summation Y. What is the numbers of here? 1, 2, 3, 4.
Yeah.
That is what? 4. You will divide this by 4. That is n. Summation Y. Add all the Y together. Add all the X together.
And the summation of y is 578,200.
Summation of Y is what?
578,200.
578,200. And X is what?
Summation of X is 2,70,560.
I didn't get that.
2,970,560.
2,970,560.
60.
560.
Yes, sir.
Okay. Let's check the question again. To determine the linear function for maintenance cost, using the average range method. Wait, oh, they give us inflation, no?
Okay, inflation index.
Yo. You're supposed to multiply it by the inflation. They give us the inflation. They give us the inflation. You're supposed to get the actual maintenance cost for each of the year, factoring in their inflation. Determine the linear function for maintenance cost per user using the range method. Then, using the cost function, forecast the maintenance cost in 2017 based on the volume of 155. That one is giving us a volume of 155. That is the big aspect of it. But first of all, what about the inflation? Your stuff is never wrong. Just have your inflation here.
Okay, sir.
Have your inflation. Write out the inflation as you are given per year. 100, 103.5, 107.5. Then you have your what? 110. So this is your cost. This is not what your X will stand for again. It will be the cost after adjusting for the what? Inflation.
Okay.
Do you get that? It will be your cost after adjusting for inflation. Just say cost after inflation, or just call it cost adjustment. You don't need any story. Call it cost adjustment. Because they've given us inflation, we don't supposed to use the actual cost. Now, how do we factor in inflation into it? This is 100. Inflation is in good. Inflation is in percentage. Suppose they did not even put percentage. Please put the percentage. Inflation is in percentage. This 100 is 100 over 100, which is 1. This is 1.035. This should be 100 over 103.5. You now multiply it by the actual cost you have, 675,000. It will give you the new cost, 720.
I have a question, sir, please.
Yes, sir. Go ahead. Yes, sir.
If anything carry percentage, is it not the one that's supposed to be at the denominator, then the percentage will be at the denominator, sir? I mean, is it not the figure that will be at the numerator, where the percentage be at the denominator, sir?
Thank you.
Like
when we are inflating, we inflate by, I always put it like this. Increase is 1 plus R. Decrease is 1 minus R. Yeah, they've given us percentage. This percentage is 103.5%, right? That is the R. 103.5%. Now add 1 to it. Can somebody convert this to decimal, or what do we call it? Yes, to decimal for me. 103.5 divided by 100 will give us what?
That should be 1.035.
1.035. Is that not? Yes, they've already added this one for them to give us 1.035. They have already added. So for us to now get the inflated factor, cost inflation index 100, 103.5, they've already factored in the inflation. So we have to remove the inflation back. To remove the... Hello?
Yes, no, I understand. I understand.
So to remove the inflation back, we just have to have, this is remove 0.35 from the 100. It will give us what? Ideally, that is why we are having our division in this manner.
Okay, sir. No,
We're supposed to give it to us as 10%. It's supposed to be 1 plus half. What is that percent? If the percent is 3%, it should just be 1.03. And in this case, they've given us to us as 1.03. Remove the 1 again, it should be 3%. So 100 over 107, then this will be 100 over 110 multiplied by, this is carrying 780, 450. Why this have 794, 750? Please, with your calculator, what is our cost? After
for 2013 is 675,000.
675,000. Next.
Before 2014 is 696,000.
696. Now, hold on, please. Hold on, please. You see the cost after inflation give us what? 720. Before the inflation, what does it give us?
696,000. It dropped.
Do you see that? This is cost without inflation. This has already, that's why I said the inflation has initially been added.
Okay.
Next one, give us what?
Next one give us 726,000, sir.
726,000. Next one, give us what?
722,500.
722,500. Addition of everything, give us what? This is what we stand for our X. Our high and low method will be wrong because we have used an inflated cost as well. What is our total cost?
281,9500.
381.
281,9500.
9500. 1, 2, 3, 1, 2, 3. Now, please, let's come back to our high cost. What's our high cost?
Okay, our high cost. Okay, using the adjustment, the cost adjustment, sir.
Yes.
Okay. Our high cost now is 626,000.
696.
626 for 2015. 626,000.
726, not 626.
I mean, sorry, 726. I'm sorry.
2015.
Yes.
Hello.
Yes, what we do.
So what's our highest cost?
726,000.